Hey everyone, Eric Mackay here, founder of Confessions Music Publishing and Imber, and former EVP of Digital at Warner Chappell, and also a very proud member of the Lone Wolves community. So today has been a busy news day so far, but the one story that jumped out at me, because I'm such a geek when it comes to stories about rights, is the news of Warner Music Group, my previous employer, and Bain Capital investing $1.2 billion into a fund to acquire catalogues. It's a 50-50 split between the parties, but this puts it as one of the largest individual funds raised to date. It puts it slightly behind Hypnosis or Recognition's public fund of $1.3 billion, and also Primary Wave's massive $1.7 billion fund. It also puts it behind Concord, who have deployed over $2 billion to date, but that's not strictly a fund in the same way that the Warner-Bain deal is structured. So what really sets this apart is Warner's own infrastructure. As a major music group, they have the ability to control more of their licensing revenues directly, and so they can increase their margins on anything that they generate from these works. I've been involved in some of these acquisitions in the past, and one of the key things that the creators or their estate is looking for is to find a good home for their catalogue. One that's trustworthy and respectful of the catalogue, which means maintaining more control in line with what the original creator would have wanted. And it's a seller's market right now, as there's so much capital in play. These deals aren't a one-size-fits-all, though, for creators, and I would never hold it against anyone who wants to sign away parts of their catalogue. But my one plea to creators is to make sure you know what you're selling, as once it's gone, it's gone. And on the publishing side, you really have to understand what it means to sell the writer's share of performing rights, as if you sell off those rights, then that's the last money you'll ever see for that song. The other thing that I always think about when these deals get announced is the need for more efficiencies across the industry in general. If you want to recoup the value of these big acquisitions, which sometimes they've gone for a multiple of more than 20 times the annual value of the works, then you have to create bigger profit margins elsewhere. So as much money as there is in this space, there's potentially a lot more to be made if the right efficiencies can be found.